Okay, thank you for the question. So I'm gonna try and see how I'm gonna answer more accurately. And what I would do in this situation is that sometimes you have to consider. We don't take blindly, when the failed breakdown comes, we don't take it like blindly. We have to consider what is the overall market condition and at which phase we're at, okay? Like, for example, let's say we have the high time frame now, okay? Let's see in the 1 hour, market went up, tested a level which was here, and now it's coming back. So we know the market is at the pullback phase, so it's downwards, imbalance down. In that case, we're gonna readjust our targets to be lower. Could be like the previous DVA low. Let's say here is okay. Let's say this is the high time frame. Okay, and this is the intraday. Okay, let's say that the price has come down, and here let's say is above is the previous DVA high, low, and VWAP. Okay, so let's say if we know we are in the downwards move. We know there's plenty of way to go. So we suspect that the prices continue lower. Okay, in that case, we need to set realistic targets. So for example, it could be the previous DVA low, which is this one, or it could very nicely be this DVA low, VWAP, and DVA high. So you're gonna see many times that the price, when we're coming down from a rejection and the high time frames we're in balance down, we we're going to set a realistic targets. So most realistic targets, it could be like either the previous DVA low, or more realistic targets, it could be the VWAP. Yeah, you know what I mean? So all like everything we do, and when we take a trade, we need to consider what's the environment like. Okay, so I guess the screenshot is from these days when the environment is very choppy. Bulls are, are not very strong. They can't push lower. The market can't push any lower, but they can't push any higher. So we kind of like stuck in a consolidation phase. Okay. So this is a consolidation phase. Okay. So what I really like to do. Okay, we have the 73. This is the level of interest. Okay. So in that case, let's see that the market is here. We don't have any of this. This hasn't happened yet. Okay. And we see we did a failed breakdown. Yeah, we're gonna take it. We're gonna take this. It's a failed breakdown. If the market, uh, you know, if the market has our conditions, so let's say it has shown very good acceptance, or we are 5 points above, we take the trade as per usual, and we place the stop loss as I said, 5 points below. So let's say the stop loss could be here. Okay, I'm gonna write stop loss. Okay, so the stop loss is here. We take a trade. Let's say that we have our target, okay, to have these highs. Uh, let's say we have these highs as a target, okay. Let's say it's your blue line. Let's say this is your blue line, which are the targets, okay. We see the market; it hasn't hit the target yet, okay. It hasn't hit the target yet, and it comes down. No need to panic. No need to do anything. We just wait and we see if it's going to hit our stop loss. If the market truly wants to go up, the stop loss will be in place, okay? Because this 5 points is the crucial zone between the market going up. So let's erase this one, okay? So okay, so this 5 points zone, when after failed breakdown, this 5 point zone is the crucial zone where the market is going to decide either to go up like this, or it's going to come back test and go lower. Okay. Usually I don't go exactly 5, I might go to 6 just to be on the safe side. Uh, so yeah, if price comes to your stop loss, which is 6 points below the swing low, so this one should be 6 points, 5 to 6 points, no lower than 5 points. Then the market you're gonna see is gonna fail and it's gonna go lower. So there's no interest of re-entering anyway, because we'll be taking out, it's going lower, we don't really care. We'll be looking maybe for an entry later. Um, if the market, as here, if the market continues higher, then we are still in the trade. Everything all right, you know what I mean? So all good. And you see the market actually hits our target, which is the swing highs here. Okay. Yeah, that's pretty much it. It's pretty simple. So we enter, we make sure we do our everything according to our protocol, stop loss targets and everything, and then we just let the market decide what it wants to do. We don't micromanage, we don't do anything. Just let the market play. That's what I did yesterday. If you see my trade, the market went against me to test the previous day low. No need to panic. I had my stop loss there. The market hit the previous day low, rejected, and went to my target straight away then. Um, yeah, in that case, only if you're really stressed out, then you say, oh, I have open risk. I don't want to see my market going against me. You can maybe set more conservative targets to take profits. Maybe you can, see the highs, you see the VWAP. Maybe you can set to take profits here. And then you say, okay, I can take profits here. It would be a less RR, but if you have the stress of market coming against it, maybe you can take your 90% earlier, and then you can leave a 10%, and then you can leave a 10% in case it hits actually the ultimate target. But be careful when you take the 90% off and you leave a runner, if you leave a runner, make sure the stop loss needs to remain there. Okay? Because as you see here, if you take the 90% off and let's say you pull the stop loss to break even here, you're gonna get stopped out when the price come against you. So the stop loss, as long as the trade is on, it needs to stay in the same place. No need to move, no need anything. Just let the runner do its thing. And if you had a runner here, you could get profits here, and you could get some additional profits from the target. Uh, yeah, that's what I do. 6 points is the magic number. I've seen it working perfectly fine, and yeah, you just have to be aware the whole what's the bigger picture, and just adjust on your targets mainly. You know what I mean? When to take a profit. Otherwise, let's say here, if you're in a downtrend and you have your targets up there because you are very optimistic, what's gonna do the market if you haven't taken any profits? No partials, no nothing. If the markets go here, you're not gonna get filled up. The market eventually, because it's downtrend, you're gonna get stopped out. So it's really important, especially in a downtrend, to have realistic targets. So at least you can get the 90% off. And the run is okay if you get stopped up, at least you get some profits here out. And as I said, the most realistic targets in downtrend is either the VWAP, DVA high sometimes, or the previous DVA low. And if the market is not so bearish, maybe you can target for the previous VWAP, which is could be higher here, probably somewhere here. But that's it. Yeah, everything comes by practice. Just keep practicing, set realistic targets, and you will see the strategy is very solid, honestly. As I said, I've done my back testing now. I'm continuous, and the returns are solid. There's no need. I mean, this is a mechanic that the ES is been doing for the last 100 years. It's not going to change now. You know what I mean? So this is a mechanic that the ES is going to keep doing for the future. So If you learn this, then just say yes, it's going to be like an ATM machine, honestly. That's it from now. If you have any questions, feel free to reach me out. Cheers.